All right, we'll just start now then. So, folk will join us as they go. So, hello everyone, and welcome to the first webinar, Money Insights webinar of 2025. Now, for those of you who don't know me, my name is Karen McFadden, and I'm the founder of Money Insights. I swear I am a good Karen, so please be kind. Now, I started this company because I've been in the finance/funding world for about 6 years now, and I couldn't believe across all the products and services I sold and talked about, I couldn't believe the amount of money that business owners missed out on. And some of the times it was because you didn't know the opportunities existed. Other times it was you didn't really know who to talk to about it. Or even worse, you did know about them, you did know who to talk to, but money just gets so overcomplicated and overwhelming that you thought, to hang with this, I just don't get it. And unfortunately, you've missed out. So I kind of thought there needs to be a better way to help companies understand and get introduced to these opportunities and these finance experts. Um, and that's why Money Insights was born. So most of the insights that I share with my members, they're all there to help you work a bit smarter and really just to put more money in your business. And we get to do that through the help of our network and the partners that are all part of that network. So that's a perfect opportunity and segue for me to welcome Alan to the stage. Alan Anderson of TSF Finance. He's one of our partners and members. Alan, do you want to jump on and just introduce yourself, a wee bit about TSF, and then we'll jump into kind of what the lending landscape looks like?
Thanks, Karen. I was hoping you were going to say partners and experts, but I've not made it into that category yet.
Oh,
My
sorry,
name's
partners and experts, of course.
yeah, note to self. Karen didn't call me an expert. My name's Alan Anderson. I am the founder of TSF Finance. We are a Glasgow-born commercial finance brokerage, and we have UK coverage. There's 14 members in the team. And we work from anyone from new start businesses from £100,000 turnover up to 100 million turnover businesses, going through difficult times in the business life cycle and the risk life cycle of a business. We focus on our real ethos as being the old traditional bank manager. Often nowadays, people in our line of work tend to just stick to one product, but all of our representatives are all trained on all products, so that when we're speaking to a business owner, we can identify what they need rather than just trying to put them into a square peg into a round hole.
Perfect. No, really good start. Well, Alan, you obviously know that Money Insights is all about helping companies access these opportunities, learn about them, make money easy for them, and of course, have these conversations to experts like yourself. So, do you want to maybe give us an idea of the types of clients that come to you, the types of perhaps more obvious ones and then more unique companies that you've
Yeah.
helped?
An average size turnover business that we look for, our average size turnover of businesses that come to us tend to be between that 1 and 3 million turnover mark. So businesses that don't have a full finance function in place, they maybe don't have a finance director, but they need to outsource their funding because it's quite a convoluted world. There's a lot of people out there. There's a lot of people doing different things, and it's quite hard to cut through what a lender actually wants from a client. So that's the typical ones. That's an average deal size. There'll be turnover size. They'll be in all sectors. I probably say we do quite a lot in the engineering sector, but we work across recruitment. We'll do some retail for some big clothing brands that we've got on the books, and then there's the biggest client we have that just now turns over 180 million, and that does lots of CNC machine parts into the automotive industry. And then we've just completed a transaction last week for a gentleman that wanted to start up his own joinery business, and he needed a van. So we'll go from everything. There is like so many extremes that we will work through in a business. So there isn't, again, joinery businesses, construction, everything. There's so many different things that come across our desk on a daily basis.
No, that's really useful because, again, and like I've said to many of my members, I've been in finance for 6 years, but I come from a sales background, not an accountant background. So when it comes to a lot of these topics, sometimes there's a lot of assumption that the person you're speaking to knows your world and knows, what you can offer and how you can help. So do you find that perhaps the prospects that come to you, do they come with knowledge of exactly how you can help them, or do you find that you have to educate them a wee bit to let them know the options?
Everyone, it's quite an interesting thing because we were talking about this the other day. Everyone comes to us with a want, but quite often they don't know their need. So they'll come to us and say, we want a loan, we want invoice finance, we want an overdraft. But when actual fact, when you bring it all back, they might need 2 or 3 different things. We had one that says, we want a loan to buy a van. Like, well, that's not potentially the best way to do it. The best way to do it is take hire purchase against the van. Or someone wanting an overdraft, when in actual fact, they were unlikely to get it because of the way that the business was structured, and we went down the invoice finance route with them. So a lot of people come with knowledge, and then it's our job to look at it, run through the different scenarios and give them options for them to choose. Then when they've got the option, then we need to select the lender that's based in their risk profile, and that risk cycle that I was mentioning earlier. So they have an idea, they've got a need, they want a product, but they don't necessarily know what they need, and it's our job to work through that and get it right. Now, quite often, a client will come to us and they'll want to hire purchase a van, and that's the right product at the right time. But there is when we're doing the trickier transactions, quite often clients will come to us a little bit helpless, thinking, I've got all of this. The current lender doesn't want to lend to me anymore. How do we fix this? So there's lots of different varieties within that. But yeah, a lot of clients will want something, but it's not necessarily what they need.
Okay, interesting. And I suppose, it's very similar to my world because, again, I've picked up a library of finance gurus over my years doing this, and a lot of folk come to me and say, Karen, I need money. And I think, okay, you need money, but let's break down what you need it for, when you need it. And of course, then, that's where I can introduce these alternative options. I'd be quite curious, Alan, to learn, do you see any changes from 2024 and then now this new year beginning in your world? Has there been any disruptions or anything that viewers should be aware of?
I think in the lending market, there's always disruptions. It's an ever-changing environment. The lending market can be triggered with a change in government. It can be triggered with a change in corporation tax or entrepreneurs relief. And before you know it, there's everyone's trying to do something. So the lending market from 2024 to 2025, I think my initial gut feeling is it's going to be more positive than what it was in 2024. We had a lot of disruption. We had the politics, the Bank of England, the inflation. We had negative growth. But when you're looking through to 2025, it feels like the Bank of England have got that. There's more of a reasonably solid forecast, it feels like, although it did say the word forecast and solid together, so please excuse me. Where they're expecting the base rate to fall 1 to 3.75 type thing. So potentially between 3.75 and 4, and they reckon it will happen 3 times over the year. And where the GDP is expected to rise by approximately 1.5%. So that means we're going to show growth in the economy and not negative growth in 2 quarters. We all know two quarters negative growth will lead to a recession. it felt very much like 2024 was in a recession, and some of the stats back that up. But as we go through 2025, it feels like there's a little bit more stable economy. The growth is there. We're over Brexit. We've had the impact of the wars. That's there, and we're in this new normal. So I think that as we go through 2025, I think the lending landscape from a like a sort of a stability point of view is looking okay. Especially if the base rate falls, because I think it's going to create more lending opportunities to go. But I think, as taking aside the sort of a economical gut feel that I've got about how that's going to work, we've got other aspects of the lending landscape moving quite rapidly. Actually, the UK SME has always been set up with the main 6 banks, and in Scotland the main 2 banks. Over the years, probably since 2008, that has continued to be diluted by alternative lenders. Although when I came into this sector, you went and got money from your bank that had your clearing account. Now you've got companies that will have banks have lending from up to 10 lenders based on, depending on what type of work they do. So just now what we are seeing is there's a massive rise and a push in these alternative lending platforms or disruptors to the banking market. That, alongside automation and AI, we're seeing that lenders are making faster decisions. It's easier to get access to the money, but it's becoming very automated and not people related. So with this rise in the alternative lending platforms and the information for tech, everything then goes down the road of algorithm driven. And I think that's going to continue in 2025. I think it's going to get stronger in 2025 because every one of these lenders now is working off data. That sector with those net worths and that credit rating usually brings this result, which is great in one side for the companies that can get access to it, but there's a massive negative for the companies that have had a small blip. They might have a slight negative one year and they might have made a small loss, or their net worth has went down for some reason. It might be that director has missed a payment in a personal mortgage. All of a sudden, they get spat out of those lending platforms. And then there's a little bit of a helplessness, and it's like, well, where do we get money? And that's where we need to make sure that there is enough competition in that market, which is a little bit of a storybook lend, that people are doing it, because people are getting rejected now on the algorithms, and no lender will tell you what the algorithms are. We've kept track of lots of data points, and we are getting better at it. We know if credit safe rating below 40 isn't going to get much with anybody, but 45 can be debatable. So we've been working in these data points over the last 2-3 years, and we still can't make head nor tail of it, but we've got a better idea than what we did 2 years ago. So I think that the lending platform, the lending landscape from an economical point of view feels like it's going to be fairly stable, unless something crazy happens. And then the rise of the alternative lending platforms, especially with the ones around the automation and AI, it's going to be fantastic for the people that can get it. But I do have a concern over the people that get rejected from it. Where do they go and what do they do? Because quite often a lot of these borrowers can see an advertisement in between Coronation Street, jump online, try and get declined, and then there's the helplessness around. And that's one of the things that we're quite keen to try and help clients with.
Perfect. I mean, there's a lot to sort of decipher there. I suppose this could, again, going back to money can get complicated very quickly. What I always relate well to, Alan, is like a picture of client starts with you at step 1, and this is what the journey might look like for them. So I'm getting the impression that a journey can look very different for a client depending on what their credit rating is, what their history's been, what their projections are, turnover is, etc. But I wonder if you could maybe give an example, because there'll be audiences on here, viewers here, that perhaps if they're dipping their toe into this space for 2025, and then there'll be some that are more well versed. I suppose, would it be useful to maybe give an example or a case study of a unique example that you had where maybe someone was rejected from an alternative lender, came to you, and then you worked your magic?
So we had a hire business that started, and it was a sister company of a very strong business, and they had a hire business, and they wanted to raise quite a bit of hire purchase to buy assets to hire out, and they got their first tranche of cash really, really easily. They got that first tranche of cash really easily, and they then bought the assets, and they hired out. They then went to the same lender and got declined. And the lender had made a comment like, "We're not sure how that got through the first time." And it was a little bit like they weren't sure how they did the deal because this was a really new start business. So the client came to us and we looked at it and we actually said, "We don't know how you got that money," because it was a great deal for a new start business. So from that point of view, we then went on a journey with the client, and we had to really take a step back and look at what their process was and how they were going to go to the market and raise the finance, because they've got massive expansion plans over the next 2-3 years. So we sat with them and put a strategy in place and said, right, we need to be really careful how we approach the market here, because if we put a shotgun out there to try and see what sticks, then it's not going to work, because we're just going to get lots of declines, and it has impacts in the business and the personal side of things. It's lots of impacts it. So we then went on a process of getting the business's numbers looking good, getting proper forecasts, making it displayed properly. And then we built a real picture to them. We changed the structure of the deals that they were wanting so that these guys would put more money in to make the lender feel more comfortable. And since then, we've had 2 further tranches of drawdowns to buy these assets, and we've got our third one coming up. So that was a real good case. And that gentleman had been to other brokers like us, and he just kept getting pushed back because it is very much in the difficult box, that client. But it was something that we're in it for the long term. We hope that in 3 years we're doing the transaction so quickly. Like, there's lots of profit in 3 years, because we know we're not getting a lot of profit just now, and we've said that to the client. But it's all about the longevity of the relationship and making sure their processes are in place and their buying strategy is correct. So that was a real good one. That was a really, really good one. Another one we had where a client came to us and they had got themselves into a little bit of a mess where they took out a number of really expensive unsecured loans. So they had you're rhyming down the list. They had everyone that you would know, like on the list in there, and some of them were charging 3-4% per month for like £100,000 borrowing. And the client came to us with a view of, we think we're going to have to go under. Or if we can't consolidate these, we think we're going to have to go under. But what they had been doing is taking these loans to buy machines. So we literally quite quickly pivoted and said, wait a minute, you've got all of these machines that don't have finance on them. We'll just fund them, take it over 5 years and pay off these loans. And we dropped his monthly repayment plan because it went into a more normal APR in the HP world. And yeah, we thankfully did a good job there. But that director, the second example I gave there, they went for really cheap, easy money. And they went for really easy and quick money, which is usually expensive money. So they were knee-jerking without understanding the market. So there's sort of 2 case studies where we looked at something and analysed it and came out with 2 really good solutions.
Perfect. And what I'm picking up from this is so key, and it really falls in line with what Money Insights is all around. It's education that you're sharing. It's not just saying we can do the same as everyone else. Who do you want? We're 1% cheaper. It's a matter of kind of looking at those very lucrative opportunities, and then not so much, and going, right, well, how can we actually turn that into something better? How can we,
Yeah,
because that's the thing. They'll remember. They'll come back to you. You'll have gained that trust. So excellent.
absolutely.
Do you know? I wonder, that's kind of making me think again. Dabbling in any new topic, you'll have questions, and then you'll have concerns maybe, and then you'll have done your own reading, and you'll have went on ChatGPT and been fed 100 answers. I wonder, Alan, what sort of tips would you give SMEs that are looking to sort of raise debt in 2025?
I think there's 3 or 4 things that are really, really important. We're all guilty of this, myself included. You get on with running your business, and you sometimes don't have the strategy in place in terms of what your business looks like online. So I think the first thing is to understand what your lending options are. Like, what do you require? Do you have the financials to support that? And that comes back to knowing your numbers. So the key thing that I would always say is there's so many good like hacks, even for people that don't have FDs now and things. If they keep their Xero or their QuickBooks or whatever they use up to date, it's usually pretty impressive the information they can get. But how many times does the 1 million turnover engineering business run their P&L? Most people
Oh,
won't do it.
absolutely.
And that's the thing. It's understanding where your business is in the credit cycle and being honest with yourself. If you've got HMRC arrears, then you're not going to get the cheapest deal. We will get something there for a higher purchase in invoice finance, but it won't be the cheapest because you won't pass that. Getting back to that platform, lending platform analysis, you won't analogy. You won't get through there. So I think the first thing is build a strong business case. So make sure you have the right financial projections, or if it's a smaller thing, make sure you understand how that asset is going to make you money. And really just build a strong business case, understanding your financing needs. There's 2 different types of financing options in my head. There's working capital, which is when you're winning new work, you need money to fund the ongoing day-to-day requirements. And then there's investment loans, where there's either an unsecured loan in the business to hire new staff, or there's hire purchase in the business to get new vans that are more efficient or can go into city centre or something like that. So it's really understanding your finance needs, not wants. Building a strong business case, understanding how that asset. The one thing I will say to people: how is that money going to make you money? Because some people might turn around and say, well, that 3% per month is fine because I'm making 20% on the margin, so I'm okay with that.
Yeah,
So how does that money make you money? And quite often, I often say to directors, like, so the interest is high, and I'll quite a direct conversation. The interest is high. It's going to be 15 grand a year, for instance. Just, can you make more than 15 grand a year from this money? And they're like, yeah, we can, absolutely. So, but if they can't, they shouldn't take the money. So how is that money going to make you money? And then be aware of your credit worthiness, like making sure that you are filing your accounts on time, ideally making sure that you're with your forecast, that you're building strong projections, like you're having a really good financial need. Because say if there's a marginal deal that has just maybe went into break even, but they've got beautiful forecasts and a good bank statements, the lender's going to have a lot more goodwill towards that client because they know the client understands what their business is. But if there's a business that's just got a break even and the bank statements aren't that great, like they're unlikely to get anything. So it's really just understanding that. I'll often say to clients, never let your bank fall below a certain number. That might be 10 grand, might be 50 grand. Just make sure that's your new zero. Because when we're looking at getting lending, that's what lenders look like. They look and see if that direct debit came out any day of that month, would it be bounced? So it's all these little tips and tricks to help people get through and get the credit and get it get the finance to help grow their business, or indeed help turn around their business. Because we can raise finance to help when businesses are struggling, and they've maybe lost work, but there's new work coming, need to bridge that gap. We can work on that as well. But it's all about understanding your needs, understanding your business case, and how is that money going to make you money? Because nobody's selling anything for free. So it's like, I quite often say to clients, you know, the margin you make on buying and selling your product, your funding should be a cost of sale. Because without that funding, you wouldn't be able to buy the product. But quite often directors will just say, yeah, I bought it for £1, sold it for £2. But if it cost you £1.50 to borrow the money to buy it, you're making a loss. So it's a really bad example, but you get the gist. That's the sort of what we're trying to say to people, is just make sure these are all part of it.
And, it's an interesting take, because, again, in my world, I'll have members come to me and say, I want to go for a grant, Karen, or I want to go for investment, or whatever it may be. And, there'll be the simplicity of asking questions like, what does your pipeline look like, your forecast? What do your numbers look like, moving forward? Or what's your business plan? Or, these other obvious questions you would think. And then they respond and go, oh, I haven't done that yet. Or, oh, I haven't got to that yet. Or I haven't looked at that. And I think, well, investors are going to tell you to beat it because they have no time to waste on empty numbers or empty projections. So it does sound like, as much as your service is there, your service is there, but there needs to be some circular approaches to this. Like you say, you need to know your numbers well, you need to keep your bank healthy looking, you need to have your pipeline projections looking clear. But I suppose if companies do come to you with these issues, or they're not 100%, that's something that perhaps you'd be able to assist with.
I think that's the bulk of our work.
Okay.
We don't, like, I don't know how this has happened, but we don't get a lot of straightforward business.
Right.
So someone that's making a load of money and buying 100 vans, they tend to go to they tend to go direct to their bank. We tend to get clients at two stages: high growth, or in a little bit in trouble. So that's where the bulk of our clients will come from. And when I say high growth, that can also mean new start. So that's where we'll get them. And quite often in the turnaround world, then it's a different approach to the growth world. The stories are almost the same. What does the next 12 months look like? How is that money going to make you money? But in the growth world, you're not necessarily looking that much at going back. But in the turnaround world, you're looking at what went wrong and what's been done to fix it, and how does the future look? Because everything's all about building a story. And quite often when you're sitting with the director, they'll be like, yeah, I'm here because I've got HMRC arrears. But HMRC arrears is the effect, not the cause. The cause is they've not priced a job properly, their overheads are too high, they've not costed, but like, there's so many things that are there. It's not just, I've got HMRC arrears. There's a reason for that. And that's when we speak to the directors and say, well, you need to tell me why you're here, because we've got an approach with lenders is where we tell them everything in day one. Don't waste any time. Don't hide anything. Don't do anything. Just say, this is what's went wrong. This is why it's went wrong, and this is what the future looks like. Because we've got a bit of a no nonsense approach in terms of we don't sell. We're not over salesy. We just get it right first time. Get it the best we can. That's the motto. Get it right first time. So we just get everything out there, risks and mitigants, and put it through and get the lenders to work through. And quite often, in those circumstances, the directors feel a sigh of relief as you walk through the process, because you're almost building that business case with them. Because in those circumstances, the borrower doesn't know how to build the business case. In the growth analogy, they do know how to build the case, but in that part of it, you just need to sit around and tell them about it.
So, I suppose It's always good, and I like to touch on this with all of my partners. You mentioned competition earlier and the importance of it, and making sure that there are other lenders around. Where would you say that TSF fit in your world in terms of, because it doesn't sound like you're the average Joe lender. You've got a lot of the education background, you've got a lot of the unique case studies. Like you said, you get more complicated clients coming to you for help. So where would you kind of place TSF in your world in terms of there being competitors around?
So we're a boutique. So we see ourselves as a boutique. When I first started the business, I thought I was going to grow and have 40 salespeople out in the roads. But one, it's really hard to manage salespeople. Firstly, that's probably one of the main reasons. But as automation happens and things move forward, the role of the generalist broker who only does asset finance for those really volume businesses and it's race to the bottom in price, the way that automation, all of these lenders and these platforms are building all the databases. So there's going to be a point where everything starts happening direct. So our view has always been to see that part where people start to fall out, be a boutique, understand that marketplace really well, and be the expert in that marketplace. We do a lot of volume for our numbers, but we won't do anywhere near the volume of the generalist brokers that are just doing asset finance as an example. They'll do way more than us. But that's not what we are set up to do anymore. That was the plan, but after COVID and everything happened, I decided to pivot and be a boutique, make sure everyone that works with us is a complete expert. We've got deal forums, we chat about deals, like something complicated, WhatsApp group, how would you do this? And everyone's got a vested interest in helping each other. So from that point of view, we see ourselves as a UK boutique and the old-fashioned bank manager. Someone comes to us with a problem that can be a positive or a negative problem, and we'll help find them a solution for that problem.
Perfect. No, that's brilliant. Well, listen, my final question to you, because we were only going to do this for half an hour, but I see we're going over a wee bit. I suppose my final question, but you've kind of just answered it, is everyone's going to go on with their day after this. Business will continue as usual. What's the snippet of advice, the pearl of wisdom that you want people to remember about this conversation if they're looking for your services this year?
I think it's just if they've got a need, to make sure that they go to the right advisor. Make sure they're not making business decisions based on their knowledge, because I don't know how to be a joiner. So I wouldn't try and do a plumber or a joiner or an engineering job. So like, why do engineers, plumbers and joiners try to do a finance person's job? So get the right people involved to help your business and understand your numbers. That's understand where your business is at and get the right people involved to help you, because it will save you so much intangible time, so much intangible cost and time, and it will probably save you money in the long run by getting a good person, hopefully TSF, on board to help with that.
Perfect. Well, Alan, of course, what I'll do after this call, I'll send the recording out to the viewers, the registrants, and I'll include your contact details. Of course, if anyone does want to speak to myself on behalf of TSF, you can come through the Money Insights website, set a call up with myself, and Alan can join, or you can go directly to him. Certainly quote Money Insights to make sure that he can give you as best a deal as possible. But I forgot to mention that this is actually the second time I'm using the StreamYard platform, so it's very new to me. And I am hoping that there is the opportunity that yourselves can ask some questions. So if anyone does have a question, there is a comments chat box at the corner. Feel free to put something in there if you did have a question or you wanted to touch on a comment that Alan had mentioned. Out with that, Alan, thank you very much for your time. Of course, you will be available as part of the platform, and you will be available for follow-up conversations. So thank you very much.
Brilliant. Thank you for the opportunity.
No, my pleasure. So I'll just leave everyone on the call with a wee bit of a finisher on Money Insights. As I mentioned at the beginning, the platform is all about helping you find ways to find money, make money, win it in a grant, get it in a loan, get it back from the tax man, whatever it may be. And at the moment, we are running a trial early adoption trial. So it will be going on for 6 months, and it's a £10 per month rate at the moment. The whole point of the trial is really to get business owners and accountants, finance professionals to join, have access to the insights, have access to the partners, the contacts, the resources, everything money related, and essentially work smarter, make more money for your business. So the details are there. If you don't have access to the QR code, you can simply go onto the moneyinsights.uk/pricing. But other than that, thank you so much for being part of this webinar. There will be lots more to come, and I will be sending out the recording. And if anyone does have any questions, please feel free to follow up with myself or Alan directly.